numbers also came in better than street estimates as an operational beat drove the profit. Anil Yadav, the Group CFO of IRB Infra, joins us now to talk about that. Mr. Yadav, good morning. I wanted to start off by the operational performance. EBITDA margins at 50% plus this time around. What drove it to that, and do you think you could do better in the first half of FY18?
See, with respect to the EBITDA margin, basically in the terms of the construction and in terms of the BOT also, construction, the margins were more or less in line with the last year. But in BOT, because of the lower operational cost, the margin are bit higher. So that has resulted in increase in the EBITDA margin. And if you look at overall total income for the year, that has increased by 14%. EBITDA is also roughly increased by 14%, and PAT also increased by 12% from 640 crores to 715 crores.
Okay. Mr. Yadav, can you tell us how many more projects will reach completion in FY18? And therefore, I mean, putting the new projects as well as the rate of growth of the current BOT projects, what is the approximate revenue growth you're looking at?
See, basically on backdrop of this infrastructure trust, 6 of the assets we have transferred to the trust. And we will be adding 3 more Rajasthan projects which we have bagged last year. Those will become operational before end of second quarter. And there are another 4 projects which are under construction. Those will also basically start generating revenue in this fiscal year. And plus we have a 9,250 crores of order book that will also get executed over the period of 2.5 years. So that provides a clear visibility in terms of the revenue is concerned. In spite of the transfer of the 6 assets, revenue will be more or less flattish kind of this year. But in terms of the bottom line, since basically we are the project which we have transferred, those were hardly generating a PAT of 10 crore rupees. And we will be basically getting around 10 to 12% yield from the 900 crores of unit which we have retained in the trust, which will translate roughly 80 to 90 crores of income. And plus we have also received 1700 crores of cash from the trust, which will reduce the interest cost by 10-15%, 10 to 12% on the basically on the 1700 crores. So then that will translate, both put together will translate to roughly 200 to 250 crores of additional PBT adding up to the entire portfolio. In spite of the revenue being neutral, there will be a jump in the PBT of around 15 to 20%.
Mr. Yadav, sorry, didn't get that debt number, that interest cost saving that you spoke about, because your debt equity has come down from 3:1 to 1.8:1, but finance costs have more or less remained same. Mr. Yadav, can you hear me?
Yeah.
So I just wanted, how much do you say you will save by finance costs going forward?
Ideally, both finance cost and whatever the surplus we will have out of the 1700 crores, we should be able to save around 150 to 200 crores rupees.
Okay. Can you give us an update on when you expect to complete some of these projects, Goa, Kundapur, Yedeshi, Aurangabad, Solapur, Yedeshi? By when can we expect completions, say in the next 1 year or so?
See, basically the Solapur, Yedeshi, we are targeting, we should be able to complete, the first project which will get completed will be Kaithal, Rajasthan. By end of July, we should be able to put Kaithal, Rajasthan on, that will become operational, and followed by the Solapur, Yedeshi in this same quarter. And Yedeshi, Aurangabad and Karwar, Kundapur will be by end of this fiscal.
Okay, so once all these projects come on board, yes, sorry, you were telling me the Goa, Kundapur?
In second quarter.
Sorry, can you repeat that?
Those will start tolling from day 1.
Okay.
So which ones will start generating from day 1?
Okay, I don't think he can hear us, but he was giving us details.